If you're a fan of William O'Neill's CANSLIM method, I have a stock that is absolutely going to blow your mind. It just came across our scanners over this last week and we've just started opening up positions. Let's go through it. My name is Hamilton. I'm here with the Trading Initiative, and at the very end of this video, I'm going to tell you the exact options play we are using to grab this trade idea. Like and subscribe if you like this type of content, and let's get going. Ticker is GRAB, grab. It's a DoorDash equivalent based out of Singapore. It came across our CANSLIM with a twist scanner. I just want to show you guys really quick why we like it from a fundamental standpoint. We don't trade fundamentals, but once again, if you like that CANSLIM method, fundamentals factor into what you're looking for. Let's go down and look at the ETF exposure. First off, only 1.23% is owned by US ETFs. That is great. That means that institutions have not yet picked this up, which means it's very cheap, and when or if they do pick it up, valuation of this stock is going to explode. Okay, I want you to focus on where it is held though. Singapore, emerging market type ETFs, growth ETFs, etc. This is a recent IPO with about a $15 billion market cap, flying under the radar from most points of view. Because we're bringing up fundamentals, let's look at the earnings history really quick. As you're going to see in a second with the technical setup, we're in a very long accumulation period. Look at how many quarters in a row, not only has it beat earnings, but it's raised guidance. It once again just went through earnings, it beat it, and it raised guidance once again. Something crazy like 180% revenue quarter over quarter growth. Absolutely blows your mind. Let's go to the actual chart and look at it. Look at this. This is a stage 2 breakout incoming. If we go ahead and double click here, you can see it IPO'd at the end of 2020. It's already experienced its prolonged distribution markdown period, followed by its super long accumulation period. This goes back almost a year, 2 years now, 571 days. We love these types of stocks from a technical setup. We love big, long bases because in technical analysis, the bigger the base, usually the bigger the breakout. Overhead supply here, somewhere around 375 to 380. We like it pressing up into this resistance area. We're above the 200-day moving average and it's sloped up. We love that. RSI for the most part all year has been trending above the 50. This is a bullish momentum regime. We have had intermittent dips, but the 200-day moving average has held up well. And so we're going to go ahead and say this is a bullish momentum regime as we press into the overhead supply here. You can see just how much volume is actually being accrued within this range. There is a lot of shares being turned over at this specific price level, in between about 385 to the upside and down below north of 250. Lots of shares being accumulated here, right? So we have earnings quarter over quarter, multiple quarters in a row being beat, guidance being raised. We have a rising 200-day moving average, almost a year and a half, 2 year worth of accumulation here. ADRs above 3, so 3.79. That means this thing moves. It's a good trading vehicle. And last thing here, we have virtually no volume up and over this 380, 375 overhead supply zone. If we do break out of this with any sort of volume, we expect it to fly to the upside because there's just no resistance, right? There is no demand on the way down. We expect that no buyers on the way down are going to be looking to sell on the way up. And so path of least resistance above 380 looks to be to the upside, right? So as for the trade from a technical standpoint, we like this above 370, 375. Our first profit target is that 450 area with a stop somewhere around 330. This gives us about a 3-to-1 setup for shares, but it also lines up with the options chain. Let's go ahead and pull up the options chain really quick. We're looking at the Januaries. Generally, right now, through the back half of the year, we're looking at Januaries first to get a general idea of what type of liquidity is on these chains. These were leaps at one point. Now they're being traded for swing traders and position traders looking to position themselves out 3-4 months. So these are great trading vehicles. Right off the bat, we see lots of liquidity. This is loaded to the gills with liquidity. People want this particular position. For whatever reason, the $4 and $4.50 calls are being bought on a daily basis. Plus, look at the open interest. The $4 call is almost 50,000 open interest. And then those $4.50 calls, 11,800 open interest and still being accumulated day to day. We like that $4.50 call. If we go back and look, that is our price target, that 450 area. That lines up well with Tasty Trades and the $4.50 call. Go ahead and note the 48% IV with a 2% IV rank, meaning we can get away with just buying straight calls. You don't have to worry about IV crush. That way, if we buy these $4, the $450 calls for January, right now going for about 30 bucks, we buy them and we get the breakout in the direction that we expect. We expect to get paid 2 different ways: IV expansion and the directional play of the actual stock moving up, right? So the $4.50 calls are going to give us 140 days till expiration on the Januaries for about $30. It's a super cheap play, which doesn't mean you should load the boat on this, but this looks incredible. This looks like a very undervalued opportunity to grab these types of shares, particularly because not only have we absolutely knocked it out of the park this year with these stage 2 breakouts, but this is one of those CANSLIM type names, and you can see based off of the options chain that people are buying this. You can also see inside this accumulation zone, people are buying this. The edge here is that institutions have yet to pick this up. As always, if you buy the position, the $4.50 calls for 30, make sure you place a resting order on the books immediately after after getting filled, doubling what you paid for them. So if you pay $30 for these, put a resting order on the books to sell half of your position at $60 to turn these free, right? Turn this trade free as fast as possible. It will allow you to hold the rest of the trade for as long as you want. You can hold it up to the profit target at 450. You can chip some off there. You can continue to let this thing ride if the trend is still up. It's a lot easier to manage a winning trade if it's free. So once again, if you open something up, make sure you throw a resting order, sell half of your position at 100%, and let the other half do whatever you want. Guys, my name is Hamilton. Once again, I'm here with the Trading Initiative. We put out trade reviews and trade ideas like this all the time. If you like this type of content, please like, subscribe, leave a comment below, and let me know. Do you like Grab? Do you like this Singaporean DoorDash company? Quarter-over-quarter revenue beat, raising guidance, stage 2 breakout incoming? I don't know. I think there's a lot to like about it. Catch you next video.